Hey traders, welcome to the US market equity update. So starting with the S&P, we obviously remain at overextended levels on the higher timeframes, but lower timeframes say we do have a little bit more to run potentially. If we zoom into the hourly, you can see how this little corrective structure is starting to form a nice little ABC running flat. In terms of length of correction, probably not as long as it needs to be to have meaningful upside, although that could develop into something a little bit more complex. And we may be here till kind of end of May, in which case we'll pop higher towards 42.40 and then pull back towards probably 41.50, then accelerate to the upside from there. So it's going to take a little while for this to play out. In the meantime, we can expect kind of subdued price action moving forward. So expect something along these lines in terms of a corrective structure. Triple Q, the NASDAQ, kind of along the same lines, sitting after a pretty strong impulse off these lows. We can expect to be here for a little while in correction, moving sideways, probably also again, kind of end of May before taking off there. Dow Jones Industrial, same thing. And the Russell kind of still chopping around. The Russell looks a little bit different in terms of the structure because we do have a kind of complete corrective zigzag structure, and we're starting to get a little bit of downside here. So you might be starting to see a little bit of risk off in the kind of higher risk equity market. And this could start to be a catalyst for further downside in the broader markets. But for now, it looks like the Dow Jones, the NASDAQ, and the S&P are going to be moving sideways and have a little bit more upside before any corrective structures forms. The only concern with the NASDAQ is maybe we have the structure wrong, and what we're actually looking at is something along the lines of a rising wedge, something like that, which is very possible at these levels. Given that we are overextending in the higher time frames, it's very possible we're seeing a rising wedge, especially with the Russell looking a little bit bearish. So we really just need to keep an eye on that moving forward. But as things are, there's no change. We remain very, very defensive, and we're looking to use specific call options on specific equities to kind of take note or to take advantage of the upside while remaining very defensive for a turn to the downside. Facebook, very, very big gap open, heading in towards or following its earnings statement. It's kind of breaks away from the structure we were looking at. So I think we have to go back to this idea that what we were seeing was actually a triangle, and now we started to impulse to the upside. So you can expect further upside in Facebook moving forward, which is a good sign in terms of using Facebook with call options to get into a little bit of upside and take advantage of the upside, because it looks like Facebook wants to continue to run. So just give me a second. Apple, on the other hand, looks like it's starting to pull back along with Amazon. We heard a little bit of a zigzag corrective structure, but nothing significant yet in terms of corrective structure to the downside. It actually looks a lot like this is a bit of a correction for upside, but that's a lower degree structure. The higher time frame still suggests to me that we should get further downside towards 110, maybe 100 moving forward. So we'll be watching Apple. Amazon's another one that looks like downside. We kind of touched on that area where we can expect to see a turn, and we have a big bearish engulfing candle. So we just need to see how things are going to develop over the next few days. But so far, so good in terms of that downside structure. The structure is still holding up really well. And if we start to get some downside, we can expect Amazon to kind of shift back towards these lows at 28.60. Microsoft kind of pulling back, but no real structure there. Going to stay away from that for now. Netflix still chopping around in this little region here. So we've been here for a couple of days now. Still that big gap, and the structure still points to more downside. It's just about waiting for this little consolidation to finish off. Google still continues to march higher, well into overextended territory. So again, getting long Google, just very, very risky. A lot of gaps that are open in this market, and we can expect some downside in the future, the very least in terms of a corrective structure. So playing this to the upside is really, really risky moving forward. AMD, a little bit of a shift in the structure, but I don't think it changes much in terms of downside. It just developed into a little bit more of a flat pattern, or an expanding triangle, depending how you want to look at it. It's kind of actually like a pennant type structure, maybe a triangle if you want to call it that. We've got an A, B, C, D, E. But yeah, it doesn't point to anything else but further downside moving forward. And as you can see, big candles to the downside following a touch at 88. This should continue to the downside moving forward. This might develop into something a little bit more complex. So you may have one down, one up, and then go, which will kind of be in line with the classic charting break and retest of the triangle. And then that will actually all be an A, B, C corrective structure, something like that. So given how it's lying, I would probably surmise that that's what's going to happen. You have more of a regular flat, complex regular flat than anything else at the moment. Very interesting structure. We'll have to see how things develop moving forward. This might actually develop into something a little bit more. We have an A, B, C, go break the lows at D, and pop higher. And that's also in congruency with a classic charting point of view with a triangle with a retest. So we'll be waiting for this little move higher, and then you can start to look to add into your short positionings there. Boeing still kind of maintaining its corrective structure that we were looking for. It's a little bit more impulsive than I would like. The complexity of the B wave isn't what we were looking for, but it's still maintaining that little pattern that we have here, and we still expect further downside moving forward. You might see this get a little bit more choppy before becoming a complete B wave, and then we get another move higher. So basically, we're just waiting for this little C wave to give us confirmation of further downside. Alibaba continues to look good. A little bit of break of our flag has now been retested, and we're seeing downside from there. This is, again, still one of my favorite charts to the downside, and should continue to see downside heading into the week. We do have earnings later today, if I'm not mistaken, or this should have come out already. Anyway, yeah, the structure still looks good for downside. I'll have to wait and see how things develop moving forward. Bank of America, it looked like we were getting downside, but again, that faded away. So again, it's just that waiting game. We're waiting for that impulse, waiting for the correction, waiting for the short. I don't see anything else. I don't see a reason to get long. When you look at this weekly impulse to the upside from 26 to 40 without as much as a hint of downside, it's really showing you that we really do need to see at the very least a corrective structure, but more than likely we're starting to see an approach of the highs moving forward. The higher time frame still look good for downside. It's just a matter of being patient. Definitely not something I want to be long. We're just waiting for a opportunity to get short. We'll find better longs in some of these other equities. Berkshire Hathaway, also another one that's approaching the top of its structure. No reason to be long. More inclined to wait for the short. Beyond Meat still looking good for a short trade. The structure still kind of developing itself. I think we probably still need one more leg down as a D wave, and then a pop higher E wave. So I don't think we've had the D wave yet. It's just a matter of patiently waiting for the structure to complete itself. We should go test the lows at 120, pop higher towards 130, and then accelerate pretty strongly to the downside from there. A little bit of a running triangle structure. So nice little price action here following a really nice impulse. So we should see this chart move to the downside. We just need to be patient with it. And obviously earnings coming up on the 6th of May might be a catalyst for movement there. Citigroup, structurally speaking, we're looking really good. This is exactly what we were looking for. We were looking for an impulse off the high, a corrective structure, and now a little bit of downside. And we're starting to get that downside. Nice little gap to the downside to show the momentum that we have. And we should see this continue to move to the downside. Structurally speaking, all looks good. Would have preferred the B wave not to break the highs, but it's possible that was just a low momentum or low volume move. And when in reality, you look at it, you can see how the highs were on average, on the average chart. These were your highs here. So this is your A wave up, 1, 2, 3 up. one nice little expanding zigzag down as a B wave, nice C wave to the upside, and now we're starting to accelerate to the downside. So this little ABC looks complete, and Citigroup may be the first mover in the banks to the downside. We are very bearish, as you guys know, as members know, so we can start to look for those short entries now. At the very least, you can put an entry order below these lows, stop above the highs, and let that run, because that should be a good trade. Camco is another one, structurally speaking, looking really good. B-wave doesn't really have the complexity I would like, but this may develop into something a little bit more complex. We might see another leg lower before getting the pop higher. So this could be part of a more extended B-wave structure before we get the downside, or we could see something along the lines of a triangle developing. So let's just see what happens moving forward. I don't like this as a B-wave. But generally speaking, I think downside on the cards. We just need to find a good entry there. Chipotle, we're still waiting for corrective price action for upside or downside. We're kind of sitting in no man's land at the moment, so waiting to see the biases for upside given the structure that we've seen. But we need this to play out as a corrective structure for some time, and then we can start to look for some Chipotle longs to kind of hedge our long trades. Our short trade, our short bias. DraftKings moving exactly as we thought. A little bit of a corrective structure, touched on the 62 region, starting to accelerate to the downside. You can expect this to continue. You can look for your short entries wherever possible. And the same with Penn National Gaming. Nice little pop higher up towards 96. Didn't even get to our kind of $100 target. And now we're starting to move to the downside. So far so good, things looking good there. For the short, those are some really good high quality shorts, because these lower less known names, especially speculative nature and the kind of bubble mentality that led up to these levels, as you can see with DraftKings and with Penn State, both Penn National, both looking very bubblish, so they can expect that downside to come. So we're very much in favor of these shorts, and definitely you want to put these on top of your playlist or on top of your watch list to get into those short entries. Walt Disney continues to look really good. Structure looks really good. A little bit more upside would be great, but we've already done enough for continuation to the downside. As you can see, those numbers sitting right at that level that you can expect to start to see a turn to downside. So maybe we get up to 190, 192.50, but this downside is looking really good. And as you can see, from a classic charting point of view, you've got a nice little head and shoulders that's formed here, and that should continue to the downside. So Disney looking really bearish. EA Sports structurally didn't like what we saw. It was more of a zigzag corrective structure than anything else, but the downside we've seen the last day or two has really looked really good. The last session that we saw, very big downside. We can expect to see this continue to the downside moving forward. Perhaps all of this was just an A wave. We're going to start to see something develop into a B wave, but I would like to enter into a short here, a little bit of a double top, dying momentum. Just things look really good for some downside moving forward. So if you can find a good entry there, I think that's worth taking. Expedia, just taking a really long time to follow through on our price structure. The structure still looks good, and we should see some downside this week moving forward. You obviously have earnings on the 6th of May, which could be an acceleration to the downside, could cause some downside, but structurally speaking, we still like downside. We still like a gap to, or a move down towards closing this gap at 100. And yeah, higher time frame structure still looks good too. Ford, we were getting some nice downside, structurally speaking, really, really nice chart. Really big gap following the end of our C wave, everything pretty much lined up as we would want it to. Now it's just about finding the right entry to the short side if you're not in it already. Small chance that this is a corrective structure that is complete and we see some more upside. So you want to be a little bit defensive in your entries. But given that the earnings, the move after earnings was such a big one, we can expect continued downside moving forward, especially the higher time frame structure that we're seeing. So I like this as a short entry, especially below these lows. We should see this continue to the downside. GDX continues to look really bearish. One of my favorite charts on my watch list at the moment, getting some nice downside momentum at the end of the C wave and the break and test of the neckline, all looking really good for further downside. Gold looking pretty bearish as well. Dollar looking strong. So things lining up really well in the gold market for that short trade. Goldman Sachs, head and shoulders still holding up. Still haven't broken these highs, which is a good sign, but we've come a long way towards those highs, which is a little bit of a concern. Structurally speaking, it still works as a little bit of a corrective structure. It's a bit of a, what I would say is a zigzag with an expanding triangle in the middle, but we really need to start to see continued downside now for that to apply. If we break these highs, we have to relook at the structure, basically wait once more for another impulse to the downside and a correction that actually follows through. But for now, the structure is still in play. The head and shoulders are still in play. And if we continue to see downside here, you can see financials really start to struggle moving forward. We're seeing it in Citigroup, Goldman's still on the board, and we are definitely seeing it in Morgan Stanley, because Morgan Stanley is really a long way from those new highs. The structure itself is even better than Goldman Sachs, and we can really start to expect to see some downside here. And if you really zoom in, pretty sure you can see a little bit of a head and shoulders forming there. A break to the downside, basically a break of 81.50 is a good sign that we are heading down from here, and financials are in trouble moving forward. Biotech moved a little bit higher than we thought. It just looks like this is developing into a little bit more of a complex corrective pattern. You have an impulse up, impulse down. So it's A up, A down, chop all the way up to the highs. That's your B. So, and then you'll get another move down, which is your first C wave, and then a second C wave. That's kind of what I'm looking at that as now. And then you can see how all of that would be one big corrective structure, kind of a complex, what we call a complex flat pattern. So that's how I'm looking at this market for now. I don't really see anything else on the market, unless this is a triangle, very kind of obtuse triangle, but at the same time, it still looks good for downside. So it's just about finding your entry. You might need to be patient with this one. Maybe just trading this short down here and seeing if it runs will work in your favor, but just be ready to take a little bit of a move against you, maybe take a break-even trade and then look for a second option and getting in there down the line. But everything's looking pretty good for downside on biotech. And these big corrective structures tend to follow with a really nice big move to the downside, and that's what we can expect here moving forward with the higher timeframes. Members know what the higher timeframes look like, and we know what our targets are, and this is definitely a trade we want to be in down the line. So we're watching this pretty closely. IBM continues to kind of chop around, but we should see more upside heading into our sell zone at 165. That should take a little bit of time, so that's kind of on the bottom of our watch list. Intel moved really nicely after earnings, big dip. Exactly what we were looking for. It was just a problem trying to find a good entry to this trade. There was a little bit of a kind of running flat structure here, not a clean B wave, so very challenging to look at as a structure, but it kind of fits the bill in that respect, but not ideal. But basically, we can expect further downside moving forward. So if you're not in already, you can start to look for that downside trade. Johnson & Johnson starting to get some legs to the downside, following one last break of these highs. Now we're getting some legs to the downside, and this should continue pretty well. Nice little ABC, expanding flat. Structure looks good. My only concern is we have this wrong, and this is an impulse, and there's a structure forming for upside here, but that should take some time to play out, and we should see that well in advance if that is the case. But for now, things are looking good for continuation to the downside. Not the cleanest structure ever, but it does look good for continuation to the downside, and actually looks more like an expanding triangle or potentially a regular triangle for downside. So we could start to accelerate A, B, C, D, E, and then move to the downside from there. That's how I'd prefer to look at that at the moment, actually, rather than that expanding flat, given how long the C wave is. So yeah, looking for downside here too. So as you can see, there's a lot of shorts on this market still. A lot of short trades that we're looking at and we're still pretty keen on. JP Morgan, if you remember the GDX chart, we had a combination of classic charting and structure analysis lining up, and this is exactly what we have here too. We have this ABC running flat structure, which we were looking at. Zigzag B wave, not ideal, but it is okay. And then we also have a little bit of a head and shoulders with a retest of the neckline. up in here just 155. So if this starts to accelerate to the downside, again, financials looking really weak. We can expect to see further downside. And there's actually a little bit of a setup for you here, trading this little wedge to the downside. This is a really nice setup. I really like the structure. I really like the combination with classic charting. And I think financials being as weak as they are going to start to move now, heading into May. Sell in May, go away. Watch financials move to the downside now. Live Nation still looking good. I would like a little bit more upside here, but I probably have seen enough in terms of structure. It'll just kind of way to the downside, as you can see, touching that 0.618. So maybe a contracting flat. Always difficult to trade. I think an entry order below these lows, if that is the case, would work out in your favor. Otherwise, ideally, we would like to see just a little bit more upside to confirm this pattern, confirm the structure, and then see an acceleration to the downside there. It's not the cleanest B wave ever, not enough complexity. So you might find this is actually developing into perhaps a running triangle. Maybe we have an A, B, C. We go break the lows, we pop higher as an E, and then accelerate to the downside. So either way, I don't see much in terms of upside here. The second wave down that broke these lows, very conclusive to or for further downside moving forward. So Live Nation, another good looking short. 3M broke out of our rising wedge with quite a bit of steam, moved up to close this gap and giving you a nice little setup here in terms of a little bit of a wedge that you can trade to the downside. Higher time frame structure, not the cleanest, so a little bit of a high risk position, but we are pretty extended here. If the rest of the market's going to fall, this should get some legs to the downside too. At the very least, we should go break these lows at 188. So a nice little trade setup. And if we're wrong, we probably just chop around here for a while before making new highs and then another leg to the downside as a corrective structure, which members will know about. But so far, so good. We like what we're seeing there. MicroStrategy continues to look bearish. It's just a matter of what structure are we looking at. Is it an A, B, C, D, E in terms of this being your A wave, in which case we are in the E wave now, or have we already seen the structure complete and we're already in the impulse to the downside where this was your E wave? Now we accelerate into the downside. This is your first little corrective structure for downside. Either way, it doesn't really matter. I think we are on our way down in MicroStrategy, and this should really start to accelerate down the line, given that we've just seen a really, really big corrective structure. I think what we're seeing is something along these lines. That is your expanding triangle. We're in the E wave now. Acceleration to the downside is on its way. Nvidia, we made new highs and struggling in this region. I don't think we've done enough in terms of the structure to say this is the top and we're going to start to accelerate to the downside. But in terms of getting long, I would like this to develop over a bit more time. So this is just going to be another long that we are looking at, but we're not looking at right now. I'm just going to give it some time to develop. Pfizer continues to look good for upside, but again, we're just waiting for these longs to kind of give us a little bit of corrective structure for further upside. So you can see that's what's in common with the longs that we have on our watch list, is that we need those to develop over some time before we can get long with conviction. So you might just start to see this market pull back quite strongly, while the stronger markets look to be in correction. The weaker ones will fall quite strongly. So just keep an eye on that. As you can see, the short bias is really in play at the moment moving forward. Riot is another one. Looks like it's complete. A little bit of a small corrective structure here. Actually looks like another little triangle has formed here. Kind of fractal nature of price action, showing you a little bit of a wedge. And then you can break to the downside once again. So Riot looking really weak. Ross Stores made new highs, but very, very dying momentum. Real like rising wedge type structure that we have here, which is really nice to see. This is one that should break out to the downside quite strongly and give us that downside momentum we're looking for. There's a little bit of an argument for upside target here, but given that the momentum's dropping off so well, I'd really want this to break to the downside and just accelerate to the downside rather than forming a corrective structure that indicates more upside. So keep an eye on Ross Stores. Pretty interesting close that we saw on Friday. As you can see on the daily, a little bit of a pin bar close. We don't really trade candlesticks, but that's just one interesting indication that we have. You may want to look to get into this short in today's session with a bit of a wide stop, just in case we pop a little bit further up before turning. So, but yeah, higher time frame still looks good for downside, and a pretty substantial downside at that. So members know about where we're sitting there. Spirit Airlines, we were saying, watch for this to develop into a triangle to break to the upside. The problem that we had here is this break to the upside really faded away, and you may be starting to see that actually what we saw here was the top, and this is all of your corrective structure, and we may start to break to the downside. This is one of the setups that we have that you could almost play as a straddle, because any break to the downside at 33 is indicative of a very, very big move to the downside. Any break to the upside is indicative of a big move to the upside. So we're sitting in an area where price action is kind of stagnant, but when it breaks, it's going to break strongly. I'm kind of leaning towards downside now, given what we're seeing in the rest of the market. And if that is the case, a bit of a risky, cheeky trade would be to trade this little flag to the downside. And hope that you get that momentum to the downside, and it feels like that's what it wants to do. Probably see this develop into something more complex, where this is an impulse down, it's an A, B, C, D, E, you get another impulse down, that's your central structure, then you get another impulse up, and then all of that becomes a big running flat for downside. That's kind of longer term structure potential, but there's nothing wrong with looking at this as just a running triangle for downside that is already complete: A, B, C, D, E, and we're off to the races. So I think trading this to the downside is a good call, regardless of what the structure turns out to be in the end. It looks like it wants to break lower first, may just continue to the downside strongly, or may chop around following a break of these lows, which will give you more than enough time to get out break even. And as you can see, another head and shoulders type structure forming. Starbucks getting some downside. This is going to take a while to play out. Not looking at that for now. Seagate, really interesting price action to end the week. We were looking for this to pop up to that region, but then start to pull back pretty strongly on the higher time frame. Structurally speaking, we are sitting right at some really clean levels here. It's a little bit more extended than I thought, depending where you want to look at the end of this B wave, A, B, C, D, A, B, C, D, E, probably there. A little bit more extended, but starting to see some downside, and we can expect to see substantial downside, at the very least to break 70, more than likely to get down to 50. So just watch for this to develop into an extended flag play here. Could work really well. If you get a little bit of a flag, you trade that. That should pay off really nicely. So keep an eye on that. That's good, good quality trading there. So put that on high on your watch list. AT&T, I shifted my analysis. We're looking at it as a triangle, but now I think all we had was really a flat pattern, ABC, and now we should start to accelerate to the downside. Nice little gap confirmation there that we should see a close of this gap. And yeah, I think trading this to the downside is a good way to play. Might see a bit of a double top or something like that, but this gap should close, and that should just continue to the downside moving forward, given the higher time frame structure. Visa marching higher. We did say entry order above these highs could work. We were worried about needing a little bit more consolidation. We got a little bit of consolidation in there, and then a strong move higher. It's not my favorite trade, but this was one we were looking at as a potential for longs. You could hedge with call options. Should be paying off well. MasterCard, a concern, but should accelerate to the upside. I think I want to look at this as just a lower degree corrective structure. You might start to see some upside, in which case you want to start to look for longs. There's a nice little tiny flag there, which you may want to take to the upside, or just get into some call options. Upside target is around about 450, if I'm not mistaken. So yeah, Visa and MasterCard are one of the longs that we do like, and does look ready to move. XOM looked like we were accelerating to the downside. We had this little bit of reversal. Doesn't really change anything. I think it just changes the structure slightly. We're still looking at this as downside. And as you can see, what we saw in oil heading into the end of the week. It's good indicative price action of further downside. You have a nice little central pattern here. So this is actually a really nice corrective structure that's ready to accelerate to the downside moving forward. Again, in line with what we're seeing in the dollar. And this should continue to accelerate. Nice little expanding flat. So watch this as an entry. Nice structure. I really like that one. Zoom. Very, very choppy. We're expecting this to start to accelerate to the downside. The lack of follow through makes me think that what we are looking at is something a little bit more complex in terms of maybe a running triangle. Again, that same kind of running triangle structure. A, B, C, probably still in the D wave, or we're just seeing a break of the D wave. Probably just a break, given the structure. We've got a nice crossover there. So I think a break of this to the downside, this little price action here, break of that should be a good indication that we are accelerating to the downside from there. And again, it's in line with what these markets want to do. They all look like they're really ready to accelerate to the downside. Our bearish structures, all looking bearish, all looking ready to go. So watch for Zoom to start to accelerate. Downside target, I believe, is 180 to the downside. So looking really good there. LMT, our little extended flag play, paid off really nicely. Looks like we are kind of correcting a little bit more, closing a couple of these gaps, and we can start to see further downside, higher time frame structures. Members know where we headed here, so you really want to be looking for entries. If you didn't take this, you really want to start to look for another one to the downside. PayPal, still maintaining our bearish structure there. Lacking a little bit of follow through to the downside here, but it doesn't mean we're not going to. We might just start to see some acceleration down the line. Just a little bit of a slow start, but watch this to start accelerating. And Tesla, a little bit of a counter rally, which was interesting to see, but doesn't change the fact that I'm looking at a structure that says downside. And in fact, that little rally what we had was a little bit of a retest of the neckline of this head and shoulders. And now we should start to see this head into the fear phase of the bubble and accelerate to the downside once again. So as you can see, we had a lot of bearish price action on these charts, a lot of bearish setups, a lot of short setups that we're looking at. So you can expect to see these markets fall down the line. The indices look like they're ready to hold up a little bit. But again, it could be that rising wedge that we're looking at and not a structure that's lining up for upside. So when you look at these kind of single stocks, this does look a lot like a rising wedge that's ready to break to the downside. Triple Q doesn't really have that rising wedge look to it. But you may have just seen a small ABCDE corrective structure. This impulse to the upside was the new high, was the top, and now you can start to accelerate to the downside. That's also a possibility. And again, you can't ignore the fact that what we're seeing here is a lot like potential start of a head and shoulders top. And then finally, DJI, kind of along the same lines, where maybe this was your first move down. This is your first corrective structure. It's actually a bit of a triangle, a little bit of a head and shoulders again, and this could break to the downside. And you do have actually a tiny little flag sitting there. So yeah, watch these markets closely this week. If the dollar starts to move like I think it is, you might start to see these pull back quite strongly. We go into some major risk off over the next few weeks and months. As they say, sell in May, go away. We might start to see that play out, and that means you really need to be defensive, like we say. It's cool, guys. Take it easy. Like I said, be defensive, be nimble, find those short entries at the very least to hedge any of your longs if you are kind of a eternal bull. I'm starting to feel like a bit of an eternal bear at the moment. But yeah, there's nothing to change my mind otherwise as it stands. So yeah, keep an eye on financials. They could be leading the way down. Cool, guys. Have a great one. Members, we'll see you in the chat room. If you're not a member, please sign up. It's going to help you understand these markets in a much better way. I guarantee you that. If you're not happy with it, I'll give you your money back without an issue. Happy to give you that. Otherwise, yeah, thanks very much for watching. See you again soon.